On the economic front, the U.S. Fed officials warned that they will need to see substantially more evidence of easing inflation before they're convinced that price pressure is under control. Minutes from the central bank's most recent meeting also pointed to further rate hikes in 2023. Our Lee Rae-hyun explains.
The U.S. Federal Reserve wants substantially more evidence of easing inflation. According to the minutes from their most recent meeting on Wednesday local time, the Fed backed fresh rate hikes this year. It said that a restrictive policy stance would need to be maintained until incoming data provided confidence that inflation was on a sustained downward path to 2%, the central bank's inflation target. This, the Fed says, is likely to take some time. The minutes also revealed that a slower pace of rate rises is not an indication of any weakening of the committee's resolve to achieve its price stability goal. Officials also warned that anything other than a necessary relaxing of financial measures would make it more difficult for the committee to restore price stability. Policymakers' interest rate projections published after the meeting showed that most officials now see the interest rate peaking between 5% and 5.25% in 2023. This means at least 0.75 percentage points worth of rate rises to come. It also showed that rate cuts are not expected until 2024. One expert says that with rates so high now, the Fed is growing more cautious going forward.
The Fed, what they're trying to do right now is, balance risks of making sure that inflation gets down much closer to 2% and stays near 2%, while also trying not to over-tighten. And so by slowing down after executing this rapid tightening over 2022, they're going to be able to thread the needle more easily and take in the data as they make these decisions.
Meanwhile, after the Fed's policy meeting, U.S. stocks rose after back-and-forth trading. The S&P 500 gained 0.8% in a volatile session, while the Dow Jones added 0.4%. The technology-heavy Nasdaq Composite advanced 0.7%. Oil prices fell by more than $4 per barrel, posting the steepest percentage loss in the first 2 trading days of any year for over 3 decades. Lee Rae-hyun, Arirang News.